Hey, John Stevenson here, the Guaranteed Retirement Guy, and your source for the best annuity info in the nation. Exclusion ratio for an annuity. What is it? How does it work? And how does it apply to my non-qualified annuity? So exclusion ratio is for non-qualified money just because the money you're putting into the annuity is already taxed, right? So if it's already taxed, you probably shouldn't get taxed when the annuity payments begin, okay? So with an IRA, obviously all the money that comes out of an IRA is taxed as ordinary income. Of course, the income is guaranteed for life, no matter how long you live, but it's always going to be taxed as ordinary income. Unless, of course, it's a Roth IRA, then of course it is completely tax-free. So let's talk about the exclusion ratio. The exclusion ratio is basically a ratio that is used to determine how much of the monthly annuity payment is actually going to be taxed. So I am going to share an example, and this is from annuity.org. It's just a simple example, just showing basically if you've got $100,000 and let's say they determine that your life expectancy is 20 years, even though it's a lifetime income benefit, so it'll go out for the rest of your life, even if you live another 40 years. So they're going to pay out $565 per month, guaranteed for the rest of your life. Now, you already put $100,000 in. Okay, that $100,000 was already taxed. And so eventually, you're going to take out more than you put in, especially if you live a long time. And so basically what they're saying is, you take $100,000 and you put it into an annuity, and we start giving you monthly payments guaranteed of $565, and we are supposing that you're going to live 20 years, then that will be 240 months of payments, which will equal $135,600, which equates to 73.7%. The IRS rules, they require that you are rounding this ratio to 3 decimal places. So 73.746 of each payment is a tax-free return of your premium. So that's roughly $416.67 that is actually out of that is going to be completely tax-free. So the remaining part of that, of course, will be taxed. Here's the thing, though. What if after 20 years, you've taken $135,000 out and you're still living? And your money's gone. You're like, oh, what's going to happen? Well, of course, it's an annuity. It's going to give you guaranteed income for the rest of your life. So at that point, the full $565 that's still coming out every month is completely taxable, right? Because they've given you back all of your money and then some and taxed you on that extra that they gave you. And then, of course, anything above that is considered earnings. And so at that point, the exclusion ratio really doesn't apply anymore because everything that comes out is 100% taxable at ordinary income rates. So I hope that helps. This is a super short video, but I wanted to talk about this because people wonder, well, how much money am I going to be paying? How much taxes am I going to be paying if I put this money in from my brokerage account or from my savings? I know that some of it's going to be taxed, and I want to know how much because I need to figure out my taxes. Well, now you know the formula. So anyways, if you like this video, please subscribe and like it. And if you want to talk about your own annuity questions, your needs, maybe you're looking for annuities for just growth. Maybe you want a lot of income for yourself. Let's sit down and talk. You'll notice that there is a link below this video, and just go ahead and click on the link. It'll go straight to my calendar and we can chat. We'll talk about your personal situation. We'll look at all of the annuities available on the market, and we will make sure that you are well educated on all of the options you have available so you can make an informed decision. And then, of course, Guaranteed Retirement Guy is here to help you set that up if that's something that you want to do. So anyways, not going to try to sell anything, but I am here to help if that's that way you want to go. So anyways, thanks again for watching, and we will see you in the next video.